Welcome to ForexTV.com. It's Thursday, November 29th. I'm Remy Hookey for New York Forex Market Buzz. In New York afternoon trade, as of 1:05 p.m. Eastern Time, Euro-dollar is at 147.60 from 148.57 late Wednesday. And the U.S. dollar is now trading at 109.57 against the yen from 109.97 yesterday. Meanwhile, the dollar has strengthened against the pound, trading at 206.27 right now. In today's U.S. data releases, the Commerce Department reported that U.S. Q3 GDP grew 4.9% on an annual basis, the fastest pace of growth in 4 years. And new home sales rose by 1.7% to 728,000, which was below expectations. This was due to downward revisions to previous months. Joining me now is Matthew Strauss, Senior Currency Strategist at RBC Capital Markets. Good afternoon, Matthew.
Good afternoon, Remy.
Thanks for joining us today.
Yeah, no, you're welcome.
Well, in today's session, we're seeing U.S. equities trying to hold on to gains following the two-day rally. So first, let's look at the fundamentals. Q3 GDP came in strong, but given the housing slump and the credit crunch, this isn't expected to be the case for Q4. Now, on the heels of comments from the Fed's Vice Chairman Cohn in yesterday's session, and also as Goldman Sachs saying that dollar weakness may be nearing an end, if you could tell us how rate and growth differentials are pointing to in terms of the dollar forecast?
Well, I think that if we look at the rate forecast, first of all, we're still looking for the Fed to continue their easing process and probably cut by another 75 basis points in the next 6 months, starting with a 25 basis points in December and then followed up by 2 more cuts in the first half of 2008. This, even if we look at what the market is pricing in, the market is looking for an even more aggressive cut by the Fed, and some market indications are showing that the Fed might have to cut 100 basis points from current levels. Now, the Fed themselves, if we listen to the officials earlier in the week, Plosser and Evans, they were not that keen to subscribe to such an aggressive easing view, and were highlighting the continued concern about inflationary pressures in the economy. But ultimately, our view is that they will have to cut interest rates, which should result in a situation where the U.S. economy could start showing some signs of a recovery by the mid of 2008. Now, well before that, we see the U.S. dollar turning. So we think that for the next few months, the U.S. dollar will probably continue to remain in trouble and on a downward path. But going into late the first quarter, going into the second quarter of next year, we will probably see a bottoming in this broad-based U.S. dollar weakness. And in the second half of 2008, that could actually make way for broad-based U.S. dollar strength as the U.S. economy starts recovering.
Well, now that we've covered the longer-term outlook for the U.S. dollar, let's take a look at tomorrow's session. Here in the U.S., we have personal income and spending data coming out, as well as Chicago PMI. So let's start out with your levels for the coming sessions for euro-dollar, dollar-yen, and sterling-dollar.
Well, I think, again, given the changes that we've seen earlier in the week, which was a very positive change for the equity markets from a few weeks where we've really seen some negative results, some strong growth the last 2 days, and today flirting around the zero on the equity market side. I think we can expect some fairly volatile ranges going not only tomorrow but in the next few trading sessions. But if we look at the ranges, euro-dollar, we're currently looking at 146.36 to 149.05, and I think it will take some really disappointing and soft US data to push US dollar through the 150 mark. That is still a mark that's at the moment just out of reach for the market. On euro-yen, we're looking at 159.55 to 164.29, and then on dollar-yen, looking at support at 107.06, and resistance would come in at 111.63. Just to repeat that, the resistance would be at 107.06. Then for the carry trade currencies, which suddenly showed signs of life again earlier in the week, we're looking at Aussie yen 93.24 to on the top side at 99.87. So those are the ranges that we would be looking at during the next few trading sessions.
Well, rounding out the action for the major pairs, let's take a look at dollar CAD, which has seen continued volatility. The pair briefly reached parity in Tuesday's New York afternoon session and pulled back again. But today the pair continues to move on flows. And with so much volatility, what advice do you have for spot traders who are trading the dollar CAD?
Well, I think that basically sums it up. A lot of volatility, and what's also a bit of a concern to us is the sharpness in the moves that we've seen. So from day-to-day trading on the Canadian dollar, it is becoming very, very challenging. At the moment, it seems the market is clearly, as you've mentioned, pushing towards parity again. We've seen now, at the moment, it's the fourth time during the last 3 days that it's testing parity, not really being able to break through that. Technically, we would look for for the dollar Canada. If it breaks parity, the first resistance level would come in at 10016. Ultimately, for the Canadian dollar, it will very much depend what's going on the commodity side, and we've seen oil coming back from almost $100 a barrel to back to 90. Overnight, there was a quick spike in the oil price due to some very specific industry-specific problems in the U.S. Regarding the pipelines, but already those gains have been erased. We're trading around the $90. If we see a further fall in the oil price, then there's a very good probability that we could actually retest the parity level.
Okay, and last but not least, let's round out the discussion with a look at the crosses. You covered Euro, Yen, and Aussie Yen for us. So if we could take a look at Euro against Sterling, the pair has been seeing overbought technicals until recently, but what is your forecast going forward for Euro Sterling?
Well, the trend that we've seen from the beginning of October, we think is more the longer-term trend that we would be looking at for favoring the euro over sterling. Purely because if you look at the two economies, they're starting to diverge, with the downside risks in the UK clearly much more significant than in the eurozone. Consequently, we're looking at the Bank of England to be, if not before the Bank of Canada, then shortly after, but to be the next major central bank to follow the Fed down. And once that becomes clear, Euro sterling will most likely retest the 72 level, and then slowly but surely move even higher than that.
Okay, Matthew, as always, thank you very much for your insight and analysis.
You're welcome.
That wraps it up for your Forex Market Buzz with Matthew Strauss, Senior Currency Strategist at RBC Capital Markets. I'm Remy Hoki. Join us later this afternoon for PM Exchange right here on ForexTV.com.